Sell this now. I'm your host, Steve Van Metre, and thanks for joining me today. In our lead story today, you need to act now because a major bank's actions are going to send this crashing. And we're going to show you how to make money on this because this is our Sunday show. The show that makes you money, which is why we like to look at the technicals, momentum, and machine positioning every Sunday to help you be a better trader and investor. We give you all the tools. All you have to do is push the trade button. Now let's over to Bloomberg. We picked today's story up with a headline: as gold slumps as China's central bank halts its 18-month buying spree. And anytime you have a major buyer of anything cut their buying back, well, it means price is likely to come down. And they're not the only big buyer that's going to cut. We're going to show you what's happening in a week from now that's going to change everything that you know about the markets, as China's central bank didn't buy any gold last month, ending a massive buying spree that ran for 18 months and kicked off a huge bull market in gold and pushed the precious metal to a record high in May, one that many investors believe will continue to go higher and higher. But without China's buying, it actually is now setting up a large move lower as spot prices for gold fell 1.5% after the PBOC says bullion holdings were unchanged at the end of May. The bank had been stocking up on its reserves since November 2022, and because investors believe that the PBOC was still buying, everyone flocked into gold. And now that they're finding out that the biggest buyer has gone dark, well, now they're afraid price is going to come crashing down. And gold did soar to an all-time high above $2,450 an ounce in May, supported by strong central bank buying. The PBOC's demand for bullion has come as the world's second biggest economy seeks to diversify its reserves and guard against currency depreciation because they're afraid that a rising dollar would send the yuan crashing. They look to sell dollars here to buy gold. This was a key move that they made, and it makes perfect sense. And we'll look at where the dollar's headed and see, is the dollar going to be the wrecking ball for the yuan? Well, stay tuned to the end of the show where we're going to cover currencies in more detail and show you some opportunities in the currency markets, how to make money on this move. But one thing that no one is expecting is if the yuan is to rally here, well, that could get the PBOC to be a net seller of gold. And yes, banks do end up selling gold. Central banks are known for that, as the risk for gold bulls is that China's voracious appetite for bullion has left the precious metal vulnerable to any potential shift in demand. Of course, we'll look at the charts on gold here in a little bit because the initial price reaction looks a bit technical. It would be surprising if the announcement represents anything other than a pause in the general trend of ongoing official sector demand. And we'll, of course, what those are long on gold are hoping is that other buyers want to buy at the highest possible price they can and send it higher. The problem is, what if people run out? Well, let's talk about, of course, machine positioning. Now let's head over to Goldman. We look at the tactical flow of funds, and here we see from Scott Ruber, he had a number of incoming questions yesterday about recession, growth fears, and macro bear camp. In his reply, and sending out more broadly as equities set out higher to new all-time highs, was that the bar for being short equities right now is very high given those upcoming flow and random market dynamics. And despite early macro global stop-out weakness and the S&P 500 closing higher in the last 3 days, well, what there is something coming 1 week from now that could change everything. But let's talk about what's coming after that, because the first 15 days in July, Scott notes, have been the best 2 weeks of trading since the year of 1928, which is suggesting is you might want to actually fade being in equities for the next 2 weeks, only to come back in early July in a big way before the holiday weekend, because you know when families get together, people like to talk about making money, and one thing they're going to talk about is the market, and again, how we make our subscribers money. We'll show you how easy it is, as the best days of the year are coming up, and since July 1928, the third has had the highest day hit rate for the S&P 500 of positive returns, over 72%, followed by July 1st. Put that on your calendar. You want to be buying back in if you're out by then. And quick reminder, he says Juneteenth is an exchange holiday on Wednesday. That's 6/19. And Independence Day is an exchange holiday on Thursday, July 4. I expect large vacation schedules to take place during the week in between these days, which means there's going to be a lack of volume. And there's another factor that starts, of course, course, next Friday. This will go into effect on Monday. Those corporate share buyback blackouts, well, they're coming back. And on top of that, you have month-end, quarter-end rebalancing, and this will be big and dominate the hype closing out the end of the quarter, which means you're going to see equities for sale because they've outperformed bonds. This is, of course, another opportunity. Again, we'll show you the bond market here in a bit. And a reminder, equity exposure is already at all-time lows. This is at 25%, and this cohort keeps selling their gains and lines up with my chart. This is awesome data, Scott notes from Michael Moran, as he says, shifting from higher fixed income allocations give relatively high funded levels when talking about pension funds. So yes, they have very high equity exposure now. They need to immunize those returns. They're going to look to be buying bonds. Of course, we'll look at the machine positioning that in a bit because the U.S. stock rally faces risk from weaker economy. This from Citibank's Kaiser says the risk reward is as bad as it's been in the next 12 months. Well, maybe Scott's right that the first week of July is big, but with the corporate share buyback blackouts coming, momentum is shifting. That could get the machines to sell. So let's take a look at our screens here. We have the S&P 500. We're looking at the largest traded ETF, SPY. Momentum remains positive, but the trend is starting to slow a bit. The relative strength index is at 65, is coming off overbought territory. That MACD, or moving average convergence divergence, still have a positive cross. Now remember, last week it had a negative cross. This is one of the challenges for people to trade the MACD. They find themselves getting delayed, getting out early, and bopping back and forth. And we smooth that all out. And how do we do that with our Momentum Timer Pro? We take a look at a bunch of technical signals, add one proprietary overlay, and this gets you in trades earlier, keeps you in them longer. Right now, that is 25 consecutive daily buy signals. You can see that right here on the daily count. We also look at momentum over 1, 3, and 6 months, and you see it says max across the board. Well, that means momentum on the S&P 500 is at extreme levels on a 1, 3, 6 month basis. This means at some point it's going to have a reversal. And of course, you might know from last week, we did get stopped out of our position. And with the buyback blackouts coming, I'm actually okay with that move. There's other opportunities in the market. We'll show you where those are at. Upside target back to the recent highs. Downside target, 50-day moving average here. And you'll note we have our machine positioning. This is a fast algorithm. This is a slow algorithm. And when you pair these together, our subscribers make a ton of money. And right now, machine positioning is long. Now, we run a historical basis, but we just did something new this week. We took the videos and we now put them into very quick, digestible text format. So that way you can review the trades every day very quickly, get my opinion on the ones we think you should trade, the ones you should avoid, stop loss levels. And on top of that, every Saturday, we review a lot of our trade history, but because our data feed is going to go up in price for new subscribers, we're going to have to raise it. But right now, you can get a 30-day free trial, lock in the existing price. Now, if you're wondering why we're not looking at the live trading history, well, Schwab's got a little problem with their data server today. And so we had to take screen captures. It took 10 minutes to get each of these. And that was when I got the ones I wanted. So we'll work with this, and next week, hopefully they'll have it all back and running for us. I'm sure they'll have it on Monday. Here you see the S&P 500 intraday trading tagged an all-time high, pulled back. What we're looking at is the move down here to the 50-day moving average. You see there's lots of volume right around 514. Momentum is still relatively strong here, but it's starting to slow down. Now, as you zoom into the 90-day window, you see a lot of buyers came in right here on this dip and bought this rally. But what we're seeing here with the blackout window approaching, it actually makes sense to start to raise your stop loss levels, maybe take some profits, because when the biggest buyer goes, as we've seen with gold, and we'll look at the price chart here in a bit, what that means is the price of equities could come down, setting up a pullback going into the 1st of July, as Scott Rubner notes in his research report. Let's take a look at the QQQs. Momentum, again, positive, 25 consecutive daily buy signals. Not quite maxed out on the 3-month window like the S&P 500, but not far off from that. You'll know we got stopped out of our position, which again, I'm okay, because who is the biggest buyer of tech stocks? That's right, corporates. They're headed into the blackout window. Relative strength index still right near overbought territory. MACD now at a positive cross. Upside target 465. Downside target is the 50-day moving average. And you'll note machine positioning here is rather extended. There's a reason Goldman didn't give us an update this week, because the issue is they're already across max longs. We look at Metre, we look at Goldman, we look at the other places we get data from. You are at extreme levels of machine positioning. If they're buyers, it's very small amounts, meaning any move down in price, because remember, these machines trade on price and momentum, could get them to sell in a meaningful way. And here you can see the 6-month volume profile sitting right below the 50-day moving average, right there in green, suggesting that if the market pulls back, that's exactly where price is headed. Will it hold support there as we go to the blackout window? That's anybody's guess. As we zoom out here to the 90-day window, you see much larger support down here right around 438. So the first key, the hurdle that the market's going to get past it once the blackout window hits, is this 446 level, because at this point we can note that retail investors, again, are all in this market. Machines are all in this market. Corporates going into blackout. And what did we just hear from Goldman? Is that at the quarter in, month in, what's going to happen is you're going to see pension funds and other diversified portfolios need to sell equities and buy bonds, potentially, especially at current yields. And one thing that leads the market, well, that's small caps, again, raising a red flag here as we look at IWM. Momentum now negative on this again. Remember, we had like a 1 count on the positive last week, but overall, we see a trend here coming off a max buy window on the 1 month, 5 consecutive daily signals. We know we got stopped out of this about a week and a half ago. RSI, MACD, both decelerating here. This is important. Upside target is at 206. I'll show you where that is. Downside target, 194. And how do we know things are slowing down? Look at our machine positioning on the fast algorithm. It's saying, look, they're selling here. Momentum selling here. Again, we give you the tools to be a successful investor or trader, no matter what it is you're looking to do. And this is a key here as we look at IWM. Look at this 90-day window. You see here, right around 205.39. That is the volume profile. What does it tell you? Sellers above. We were hoping to get to this 212.15 target. Didn't get there because this is the sell zone. And what do you note? The next move down in price. Well, where are we targeting? 194.09. That's right around here, down here near this bottom here is where this goes. And keep in mind, where small caps go, large caps do fall. Unfortunately, because it took so long to get these charts, I didn't have that to show you. Hopefully we'll have that for you next week. Here, let's zoom out to the 6-month chart. You see here 198.58 is where the buyers were at the last 6 months. But what we can note is with small caps, the volume profile hasn't acted as much as support, as when it gets there, buyers turn into sellers and send prices down, suggesting we could even see a tag of this lower supply zone, maybe even the 200-day moving average right here. But one place that isn't an opportunity, one place you need to be away from, remember, everyone wanted to buy gold. They wanted to buy energy. And when do you hear people want to buy it? When prices are at their peak. Always remember, where retail goes, you should go the other direction. Here we look at energy, momentum negative. This is also bearish for the big equity caps ETFs, RSI, MACD. Again, momentum slowing, headed right near oversold territory. Momentum time pro, 5 consecutive daily sell signals. Look at this. Look at our machine positioning. We told you to get out of this during the peak. We showed you when to get in this a long time ago. And then look at this, down to short positions. When this reverses, it will create an opportunity. Of course, we'll tell our subscribers, we'll give them a note, give them all the information they need. The question is, will you be one of them to make money on the next turn in energy? Downside target, 200-day moving average. That is right here below. And you can see there's a ton of support for XLE right around 84.35. That is the likely path here. Remember, we caught this rally up here. And all we tell our subscribers is, as you make money, raise your stop loss levels. And you can see this stair step down. When it gets in, settles, and makes a reversal, we're going to be the first to tell you when to get in and make money. But one place B of A says you can make money is, well, if the Fed cut could signal trouble for the economy. But he notes that this would be good for bonds, and in a good reason why. As Goldman says, their machine positioning says bonds are only minor sellers at this point, and virtually anything triggers massive buying. And that's huge, because we know that pension funds are going to be buying bonds. Diversified portfolios are going to be buying bonds. And if you get enough movement here, well, that means, of course, the machines are going to be buying bonds too out of their short positions. And we know the machines are offsides because on a historical basis, we've been telling our subscribers you want to be long the bond market because the machines are short. On a historical basis, they should be long. That means they're going to have to aggressively short cover here in a big way. Now, right now, this is our one trade where we showed you how not to do this. And this is by not using stop loss. As you can see right now, we're down 2.98%. And we've just dollar cost average every opportunity that we've seen a pullback, and our signals have validated that, and that's how this works. RSI MACD, they haven't changed a whole lot here. Upside target 93.79. Let's take a look here where that is. 93.79, that is the 6-month volume profile. Once that breaks, you're looking at a quick move up to 100. You talk about looking for opportunities, and we showed our subscribers how to buy right back in here. If you've got a 401k and you've been sitting part of it in cash as your diversified portfolio, you should be looking to add duration to your portfolio. Here you can see, you note these places here along this dotted purple line. This is where the short sellers are at. As price rallies, they get squeezed, squeezed, and squeezed. The machines come in. You're going to see a quick move up to 100. That's money in your pocket, as B of A would actually validate. Here you look at the recent move off the payroll report on Friday in this supply zone here. Sellers came in, well as the machines just drove this straight down. And right here, what happened? Buyers came in right where they were before, holding support here. Look for a turn in price. If you're not adding to this, a rally into early next week should be the only signal you need on this one. Let's talk about gold now. Of course, remember, People's Bank of China not buying in May. Of course, that leaves retail investors holding the bag. Momentum now negative. And we warned you about this a while back. We said, look, momentum's changed on gold in a big way. And I know many of you in the comments said, Steve, you don't get gold. I do understand it. I'm not talking about the physical metal you have at home in your safe. Talking about the shares, the paper shares that you're trading here. And take a look at this. RSI is at 42. MACD's got a negative cross. Momentum Time Pro, one daily sell signal. That's only because it popped a buy signal in the middle of this. Let's take a look at gold. And you can see a one top, two top. It looks about to break support here. The word's out on China. The first level of support is right here around 200. What did we flag here? We said downside target 203. And if it doesn't hold that, well, now you're looking at a move even lower down here to 188. That would come as a big surprise to people. But here's how we showed you to make money from bottom to top. Back in October, our reports on the 12th flagged a buy. You'd be up 29% on gold all the way to the peak. All you had to do is raise your stop loss levels and lock that deal in, and you'd make money. And it only cost you. The first month is nothing. That one's on me. After that, if you bought both reports to get double confirmation, it's $550 a year to make a 29% return. Are you kidding me? Yes, it's that easy. We give you all the data. And mind you, price is going up for new subscribers soon. Let's look at miners. Momentum negative here. Where the metal goes, the miners follow. Our machine positioning is selling down on the fast algorithm. We're starting to pick up some daily counts of sell signals. Let's take a look here. Big drop on Friday. If this does not hold, look for a move down to 31. Our downside target is 32.20. That is right in here around the recent volume here. If that doesn't hold, now you're looking at all the way down to 29. The metal goes, the miners fall. You can see momentum here on the RSI and the MACD heading right into oversold territory. Will buyers step in? Or will there not be enough? But you could have made a fortune on the miners. If you like the gold trade, look at this. Our CTA Time Pro, that machine positioning, you would have been up from when we told you to buy back in March 4th to the peak, almost 34%. Had you followed Momentum Time Pro, almost 40% return. You'd make a fortune, and we make it that easy. Here's a big opportunity that we see coming in the soybean market. 8 consecutive daily sell signals. Momentum's negative. Look at the machine positioning. This is what we want to see. Max short on the fast one and moving short on the slow algorithm, and a bunch of technical signals building up on the sell side. And what did we tell you last week? If price gets down to the supply zone and holds, what should you do? You should be a buyer. It's getting down here. If it holds this, you want to look for that. We're going to see if we get a turn in momentum, and we will look to add back. Remember, we made money on this and got stopped out. That's how easy this is. You get a break above 25, and that means those short sellers are going to get clobbered, setting up a potential run up here to the 200-day moving average. Let's talk about the dollar here, because if the dollar weakens, that could be the PBOC signal to sell gold and maybe buy the yuan. Of course, we'll also look at the yen, which trades pretty well with that. And what do we note here? The dollar got a big rally on Friday, but will it last? Well, we have, as you see, back on May 6th, UDN, this is dollar bearish fund. We're still up on this, only 0.22%. Not a whole lot, but the key here, momentum is very much behind a weaker dollar. And would note machine positioning, it's a fairly neutral stance. Look at here, you see the big gap up on the payroll report. Is this going to hold? I think your upside target to the dollar is roughly right here at 29. If that does not happen, we'll look for a move down here to 28. At some point, the PBOC may look to sell those gold holdings, and that means the yen would be the place that you look to make a fortune on, of course, a rising yuan. The yen trades very similar with that. Here we can look. This has been beaten up. The Bank of Japan has been supporting this, and a weaker dollar would be a huge catalyst because there's a massive amount of short sellers. And there's nothing better we love than when we see a lot of short sellers and machine positioning kick off and momentum turn. Let's take a look back here. What do we see? Historically, machine positioning says the market should be long and they're net short. We know this. They're short in a major way. Momentum's turning here. And look at this. You've got one bottom, two bottoms. We've already told our subscribers, well, if you read the report, you'll find out where we tell them to put their stop loss level, what to watch here. But if you see a reversal in the dollar coming from that upward position, headed down and weakened like we're thinking, this thing could rally in a massive way and very, very quickly, putting money in your pocket, as we like to do every Sunday. But as always, with anything we talk about on this show, be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.